So we are very lucky to have them around. Before we go into like a round of introduction about our guests, but as well as the Fintech and Payments Club, like just a bit outlook of what we will be discussing today and the format of the session. So we will be covering corporate treasury with FinLync, which is a global fintech company on a mission to bring harmony and transparency to corporate finance and treasury. The company was founded in 2018 and supports a range of businesses from Fortune 2000 to Fortune 500 companies, and has actually employees across different geographies, including Singapore, LA, New York, and Paris. The company announced, as I have mentioned, their 16 million investment round today. So we will learn everything about that. But we will also cover basically about more about their expansion, like their use cases, the problems they are solving, but also with Adam from an investor perspective, essentially why is this market so exciting. The session will run for the next hour. We will spend the first 30 minutes of those sessions with questions that we have prepared as part of the Fintech and Payments Club. But on the second part of the session, and please prepare the questions while we are speaking, we are welcoming any kind of questions, either if you want to raise your hand and ask your question directly to Philippe and Adam, or alternatively, you can go on Slido, so sli.do, and type in FPCH1 and put in your questions. They remain anonymous, yet we will make sure we cover them. So before we start the round of intro, I will leave it to James, which is the co-founder of the club, to tell us a bit more about the club and the upcoming events.
Thank you, Sophie. Very kind. Welcome, everyone. Great to have you with us in the room. And delighted to be able to stream this room live on Facebook, on YouTube, and on Twitter Spaces, as well as on Clubhouse. So welcome to anyone joining outside of Clubhouse. And please recognize that is listen-only mode. But if you do want to participate in the conversation today, and you're not able to join through an iPhone on Clubhouse or on an Android phone as of this week, then please do use Slido, as Sophie suggests. That's the best way to interact with us. So sli.do and the event code FPCH1 as per the second line in the title of this room. But also you can use talk.fintechandpayments.club. That's a live text service that once you're signed up with just using your email address, you can also participate live and converse with others in the room. So the Fintech and Payments Club is a bit of background. We are a top 40 club on Clubhouse ranked by members. We were the 10,690th club created on Clubhouse in January. And due to some fantastic speakers like the people on stage you've got with us today, who are generously giving up their time, some fantastic audiences that have participated, whether using Slido or joining us on stage, and a phenomenal team that are all volunteers on the Fintech and Payment Club. We've been able to build an incredible community, 34,000 members and followers, growing every day. We're enormously proud of that. We've got lots of growth still to come, and we look forward to just a series of great events like this one in the days and weeks to come. If you're interested in learning more about the club, please do check out our website, fintechandpayments.club. You can learn more about the ethos. You can learn a little bit more about the people behind the club. And if you're looking to get involved, we would love to hear from you. We are trying to cover as much of the globe as possible. That's not only from a country, language, time zone perspective, but also for lots of different topics. Really, the whole point about the Fintech and Payment Club is to, if you've got any question about how money works, but you're afraid to ask, this is the safe space for you to do so. My personal interest is very much in financial education and literacy. I just want money working for more people than people working for money. So without further ado, Sophie, thanks ever so much for the intro. I'll hand it back to you.
Thank you so much, James. So now time to introduce our amazing guest of tonight. I would like to start with Philippe, which is the CEO of FinLync. Philippe, could you kindly introduce yourself, tell us a bit about your background, how you came up with FinLync, and maybe a bit more about your recent fundraising announcements?
Yeah, thank you so much, Sophie and James. And yeah, thanks for having us on. Really appreciate and grateful for everyone taking the time to listen and be here. Yeah, I can't, yeah, I'll sort of start by saying, I can't really talk about FinLink without talking about my co-founder, who also happens to be my brother, and he's out in Singapore, and I'm obviously out in the US. So yeah, we actually founded FinLink in 2015. And my background is I started off as a trader in the treasury world, then investment banking. Then I moved to the States around 2012 and fell into management consulting. And yeah, I'd got my kind of green card, and I was looking for the venture that I wanted to do, and sort of just fell into it with my brother. And it just turned out that we worked incredibly well together and had very different sort of life work experiences that were very complementary. So I'd kind of brought a lot of the expertise and capabilities around, growing a business, sales, marketing, product development, etc. And then born in financial services. And then Peter's background was always in the world of treasury. So he'd implemented kind of cash management, treasury, bank connectivity for, the Fortune 50, Fortune 500 companies throughout his whole career. And he was kind of the guy that when you really wanted the work done, you would bring him in and he'd get it done versus, you'd go to the big five and spend millions of dollars on services projects that sort of never end. So we came together really as sort of open banking was really starting to penetrate, the Fortune 2000 world. So banks building out APIs, these great services and offerings for the Fortune 2000. But unlike your sort of PSD2 open banking in Europe, where it's quite regulatory driven, the banking world for the open banking APIs for kind of the corporate treasury, corporate banking world was not regulatory driven. So banks were just building out kind of on their own design, their own specifications for this technology. And we sort of saw a big gap that there was an opportunity to help the banks get this technology integrated, and I'll speak a bit more about what the challenges are there, and also help corporations, multinational and large corporates who have operations and business all over the world, who are really plagued with challenges around visibility of their cash, like where is their money, not having tracked cash, being able to actually track statuses of their payments, and it's incredibly archaic. I mean, if you'd be quite shocked when you get into the depth of things of how archaic the world of corporate banking and treasury really is. So yeah, we just set from sort of day one, how do we build a global company that aggregates global APIs, embeds them into corporate treasuries, into their system, has consumer quality end applications, and do that obviously as a global startup. So we took on a challenge. It seems to be working so far. Adam obviously likes us. He gave us some money. So yeah, we closed that round in December just last year, and we've taken a bit of time to announce it because there's a lot going on, obviously. And yeah, just really excited now to continue our growth, expand our product suite, our markets, and our team.
Thank you so much, for Philippe, for the outlook, and indeed, it seems to be pretty much ingrained in your story, essentially. So it's quite interesting. Adam, up to you. Can you kindly introduce yourself, a bit about Point72, and maybe what made you like first of all discover FinLync and then decide to lead the round?
Yeah, sounds good. Hi, everybody. My name is Adam Carson, based out in Berkeley, California, and a member of the Fintech team at Point72 Ventures. Quick background on Point72 Ventures. We are the venture arm of Point72 Asset Management. There are sort of a few different strategies inside of our umbrella. There's the Fintech team, which I'm on. There's another team that focuses on AI and machine learning, and then there's an enterprise infrastructure and software team as well. And inside of the fintech arm, we've made around 50 investments over the past 5 years, mostly early stage investments at the seed Series A stage, and some of our companies are now at the Series B and Series C as well. Personally, I joined Point72 Ventures about 2 years ago. Prior to that, I had spent almost my entire career in financial services, starting out in New York with Morgan Stanley, and then out on the West Coast, where I was with JP Morgan Chase, and I was leading fintech and digital strategy and partnerships there. So I got a firsthand sort of look at the rise of fintech, at least the rise of the fintech disruption over the past decade, from the seat of being, working with all of the lines of businesses and functions and executives at Chase, trying to answer the question of what should we do next, and leveraging what was happening outside of the bank to understand what was happening next. Meeting with all of the fintech companies that were looking to compete with big banks, that were looking to partner with big banks, that were looking to sell software to big banks, even those that just wanted to be banked by the banks as well. In terms of our investment in FinLync, and happy to explain this more, but it fits into one of our large theses, which is that financial services is continuing to transform digitally, and that banking products, services, and data is continually being embedded in software. And so FinLync for us is a great example of the surfacing of bank data and bank functionality inside of one of the core pieces of software that runs most of the large businesses in this world, the ERP system. There's also, and again, happy to talk about this more, we spent a lot of time in consumer banking over the past few years, and towards the middle of last year, we started to realize that corporate banking and commercial banking had been in some ways sort of like, a lot of the innovation had passed by, or hadn't necessarily hit that area yet. And so we started focusing a lot on looking at corporate and commercial banking, talking to treasurers and CFOs of large institutions, and also talking to the treasury management and commercial banking functions inside of large banks to try and suss out opportunities and problems to be solved. And the problem that FinLync is solving is one that we heard over and over again on both sides of the table. On the bank side, they were looking for easier ways to integrate into the systems that their large customers used, and certainly a pain point on the large corporate side of ingesting, integrating, and being able to leverage data that was coming from the bank. And so FinLync solves that problem specifically, and not only did we hear a lot about the problem, but that's how we heard about FinLync as well, through those conversations.
Thank you so much, Adam. Before moving back to Philippe, actually, I have quite a burning question out of your banking career. So banking as a service has been in the making for like at least the last 10 years, I would say. And obviously, FinLync is focusing on solving this problem or some of the problems for the CFOs. Now, I would like to know if back in the days you were in banking and innovation, it was in your radar that potentially the banks you were supporting, were looking into essentially banking as a service, as a strategy. So what I would like to know is that if before you joined Point72, those banks were looking into doing banking as a service, such as we have seen a move like Goldman Sachs launching their TXB, or is it something that is much more recent than that?
Yeah, You know, one, I think banking as a service can come in very many flavors, and if you ask 10 people to define bank as a service, you'll likely get a lot of different answers to that question. Um, I think you're referring to sort of the bank as a development platform and trying to attract businesses to build on top of core functionality versus, most of the banks as we think about them go direct to businesses that they serve or customers that they serve with their own branded products and services. And so whether it's Chase or Bank of America or Wells Fargo or HSBC, the typical go to market for banks is to have a direct relationship with their customers, whether those customers are consumers, small businesses, large businesses, enterprises. And I think bank as a service, almost in some ways pioneered from some of the large digital companies, says maybe instead of going direct to customers and having a direct relationship, we can power companies that then acquire those customers. To your question, I think that bank as a service or banking development platforms started to be discussed a few years ago. So it is a relatively new phenomenon. There was no talk of it 10 years ago, um, but only by some of the more innovative and forward-thinking banks. I think in Europe we saw Fidor Bank was one of the first that launched sort of their own developer platform and API platform. In the United States, we saw BBVA Open launch theirs, and then some other banks like Capital One had some small services available to developers, but it's still sort of not really the main focus. I'd say for almost from the banks that we talk to, their focus is still on acquiring customers directly and serving those relationships directly, not on powering other companies to go do that. Um, even though in some places they do that, it doesn't appear to be the focus for now. We are seeing some banks globally take on this sort of more, let's say, white label bank or depository bank focus, where they're partnering with technology companies that then allow others to build on top of them and leverage their licensing and leverage their compliance frameworks and that, but it's still the minority of banks out there, both big and small. So most are still in the direct to their own customer brand building business.
Yeah, thank you so much, Adam, and I totally agree with your analysis, even if it makes me a bit sad because I would like things to go faster. Something you wouldn't know about me maybe, but I actually spent 5 years at Fidor and I was head of sales for it. So it's the reason why the passion for banking as a service is still here and has been around for a long time. Now moving on to Philip, we have discussed a bit about the problems you were solving. I would like to understand what's your typical customer, like the company size, like what they do on a day-to-day, like are they focused on international payments or even domestic? Like, just tell me more about it, please.
Yeah, absolutely. So, yeah, I mean, our target customers are really your Fortune 2000. So you're talking about, customers, generally revenue over $1 billion, large corporations, and typically multinational. So like your Nikes, your Sonys, your Microsofts of the world. So, what's sort of quite interesting, right? I mean, I'll probably analog this to, the consumer world, and some of you may remember the days when, you got a bank statement in the mail and you didn't know, the amount that was in your bank account until you got that sort of statement every month. And now, in a consumer perspective, now it's, as soon as you get paid, it flashes up. You don't think about sort of end of day balance or end of month balance. You just think, what's my current balance? And you see all your transactions in and out. You can connect all your different bank accounts and have it in one singular view. The corporate world is still in the world of the bank statement. So if you think of your company like a Nike, I mean, how many of these companies today are getting visibility of where their money is, where it is in their accounts, is they wait for the banks to send them a bank statement. And you can imagine when you're a corporation that could have 100 different banking partners, you're in dozens and dozens of countries all around the world where you're doing business, and all these currencies, and then you have multiple people inside the company in your treasury department who are managing all of this. And it isn't just payments. I mean, it's the full spectrum of sort of cash management, corporate banking, treasury. There's many different sort of names that kind of cover similar things. But it's everything from the visibility of your cash, the visibility now of your transactions. Now with real-time payment networks, you can pay in real time. So corporates are getting paid in real time. They have zero visibility that they're getting paid this money, and often they don't know how much they have in different accounts, or all their accounts around the world. We have a client didn't know the cash they have until the end of every month, and they have tens of millions of trapped cash just sitting in accounts because they don't know their position. So it's everything from like cash visibility to payments, but the status of payments. So how do you know where this payment is on the journey? Has the bank accepted the payment? Has it gone to the vendor? Where is this payment? Through to forecasting, reconciliation. How do you reconcile all these payments into your system of record? And then through into like core financing and trade as well. So getting back to sort of the bank statement, I mean, today this is how these major Fortune 500 companies get positions. They have all these different banks and they all send them a bank statement. The big difference between consumer and the corporate world is in consumer world, we can just download an app on our iPhone to get this visibility. In the corporate world, they have an ERP system, an enterprise resource planning system. This is essentially the financial backbone of the company. This is where all their financial data is, their logistics data, their payments data, all the supply chain data. All the data is housed in this system. And these systems are, like I said, it's like the financial backbone. It's really the core of the company and their data and integrated process. So when you get these statements in, you then need to upload them into this system, and you need to marry all your positions you have with all your banks with what's in your system already. It's a very archaic process. So, how do we change that with FinLync? Well, now it's less you're reliant on the bank to send you bank statements and trying to upload these and marry the data. Now through this API technology, these offerings, you're now embedding this data that you have that's sitting at the bank. And this is what corporations don't realize is this is their data. It's locked away in the bank's systems, but it's their data and they need visibility of it. So now the banks are opening these systems up through these APIs, like a communication channel and technology. So now you can embed these directly inside your existing system, this existing ERP system. So now this ocean of data you have in your system already is now fully connected with all your data sitting in all your 100 banks around the world and all in real time. So now you're calling and consuming this in real time. So now when you're paid in real time, to Chase, and they have that, your applications inside your existing ERP systems are just calling that bank constantly and bringing that data in. So you're having full visibility now on demand of all this data, and you're not reliant on archaic bank statements being sent to you, reconciling those, and days later trying to work out the cash you have available. And in this, obviously, the same technology gives you the advantages across payments and all these other things. So, for example, now when you send payments, you send them directly through the API to the bank. But the whole, one of the key values of the API is it's synchronous. You get a synchronous response. So once you make payments, the API has to tell you have to get a response back from the banks, and it has to say, we've received your payment. Here's where it is on the journey. So this kind of lack of visibility and lack of bank connectivity is really plaguing these corporates. And these are some of the biggest name brand corporations you've heard of around the world. But how they manage their money, it's really stuck in the Stone Age. And we just sort of saw how the industry just really inched forward in the last sort of 2-3 decades. There hadn't been anyone that has transformed this space and brought in the sort of experience the treasurers, the treasury teams have in their consumer lives, but bringing that same experience into the enterprise and their corporate lives. So this is kind of this end-to-end solution for these banks' APIs is what we're bringing, and allowing therefore like full transparency of the data in real time, the control of that, the security. And now you're talking about revolutionizing working capital, because now you know the exact cash you have in all your accounts. You can now invest that capital immediately. You can ship goods immediately to customers because you've received that those funds, you can increase credit limits. So this technology is really going to completely revolutionize working capital. And this is actually something that's really interesting. The industry itself is just starting to really understand, these long-term implications of that.
Philip, hi. I've got a question for you just with regards to integration. So I was looking at your website earlier, and you're obviously partnered with SAP, and I think you've got Oracle and Microsoft Dynamics coming sort of shortly. How complex is this to integrate? Is your platform to integrate into some of these ERP systems? Because some of these platforms, people make full-time careers out of programming and developing SAP systems. So is it quite complex, or how does an integration go?
Yeah, exactly. Yeah, it's a great question, Darren. So this is the other major sort of challenge we've seen, right? Which is it's a very service-based industry, and it's really run by your big five kind of consultants, and they're really doing these sort of multi-million-dollar, multi-year projects to try and connect, the corporate systems to the bank and build all this functionality. And sort of the secret's out that it doesn't work. You spend a lot of money, you never really get what you need. So as part of what we've done, instead of building something that's a sort of a SaaS system, which just sits outside of the ERP system, which would be obviously a lot easier because then you're just providing essentially, the BaaS model, the end solution for the bank's APIs. We said, what do corporate treasuries actually need? Well, they need it fully integrated into their existing system, and they don't want to be sending data out to a third party. They want to send data directly to their banks. So at the moment, we actually have an old style of technology model, essentially on-premise, where we deliver on-premise. But we do it on-premise because this is, if you think about first principles, this is actually solving the fundamental problems of what these corporations have. So yes, absolutely. If you tried to do this in an ERP system as a services project, it would go on and never end. I mean, one API spec in the corporate banking world is like 200 pages long. It's not your sort of PS2 where you've got a few lines maybe. This is very complex messaging and structure because of the data complexity and needs of multinational corporations. So again, yeah, like you said, Darren, I mean, if you tried to do this as a services project, it would just never end because you've got 100 banks and you've got maybe 20 different API offerings per bank you need to integrate. Then you need to build the end solution to all of this, so the functionality, the experience, the GUI. So what we built all natively on each ERP system. So we started with SAP. And we said, well, we need to build the core sort of mapping of the APIs, the integration into the system native to SAP technology. Because if you do that, it's scalable. So for the first time ever, there's actually a scalable product in this world, which has been just a fully services world, or maybe an accelerator type of product, but still needed long implementation. So we built something that was actually incredibly plug and play. We can get clients live in a matter of a few weeks. 2 weeks is our fastest ever. 2 weeks where typically, you're talking about a minimum 6 months, usually 12, 24 months.